Good morning. It is 10/10/2025. Happy Friday. Zack Howard here with another morning market update to end the week. Hope you had a great week and Canadian Thanksgiving. Here in my country, celebrate, give thanks for all the great things we have in our life in this beautiful world we're lucky to live in. Let's look at where the U.S. equity markets and the behemoth that is global capital sits in 2025 inside roughly 8 to 10 companies, as it was 10 years ago, as it was 10 years previous to that, et cetera, and how the times have changed, the themes and the industries that have adopted with technology and advancement. So just 10 years ago, the oil companies, utility companies, the banking companies, they dominated. Exxon, Chevron, etc., P&G, G&E. But you also had the long-standing Berkshire Hathaway, JP Morgan, Microsoft, and Apple that sit here today. Now you have Apple and the technology companies, NVIDIA, Microsoft, etc. Berkshire still stands out. But look back 20 years ago and 15 years ago, how drastically the key weighings in that S&P 500 have changed, those top 10 names. And I'm pretty certain in 10 years' time, it will look totally a lot different than it does today. Will that switch back to a more commodities-based weighing in the S&P? Probably not. I don't think, but could. But it just shows like the evolution of the economy through the lens of these different company weighings. It's quite interesting if you ask me. Maybe not. Which moves to the star of the show, Mr. Jensen Huang's NVIDIA is the biggest star in the global equity markets today at $4.7 trillion. It's had a great run. It's up 45% this year. It is a product of its technology and what it's building out and all these chips. Yeah, no doubt about it. But the bigger cause or the product of its growth is the passive investment machine that is massive. The automatic contributions each month, each quarter to pension funds. If you're a U.S. citizen, this stat is quite. This is just the U.S. Average salary $60,000. Average contribution of 401k is about $8,580 annually, and of that $8,580, $2,358 is going to those Mag 7 names. So if NVIDIA has a 7.5% weighing in the S&P, the average U.S. citizen, whether they like it or not, you're buying about $500 every year of that NVIDIA. And the bigger NVIDIA gets in its market cap at 4.7 trillion now, the more you're going to buy, the more passive is going to buy. That's what continues to build this bubble, which is what it is. And bubbles continue to build until they don't. Expensive gets more expensive. This is an awesome meme created by Copy, aka Harris Copperman. He continues to kill his meme game out there, but it's so true. There's no one buying NVIDIA because they think it's going to continue to go. As much as it is, the machine has to buy it because of its weighing. It's like the snake eating its tail and crowding out all the rest of the capital. Ultimately, this is going to be a concern if there ever is a big sell-off and the liquidity has to come out of names like NVIDIA, but that isn't happening anytime soon. But NVIDIA, Mag 7, the S&P, they get all the headlines from clickbait media, mainstream media. But let's look inside the surface. Year to date, this is a tweet by me the other day. 203 people looked at it, only like 3 likes. I think I'm banned on X, the X of apps or the app of everything, whatever it is Elon calls it these days. But look at gold miners. Gold miners, especially individual names inside of the GDX, Barrick, Newmont, Kinross, which has been crazy, AM, and my favorite, Mako, all have smoked not just NVIDIA, but the S&P this year. And over the last couple of years, gold just continues to outperform the S&P and all the drama of what is those Mag 7 names. On to earnings season. So we are into the heart of earnings season here now coming up. Q3 reporting. We start off with the financials next week. I'm sure Mr. Jamie Dimon and Crab will beat and raise expectations, and NASDAQ should perform well. But then we're into the meat of the show. Those Mag 17 start reporting here in the next 2 weeks. Something like 20 trillion of the 55, 56 trillion in fiat market cap. It is the S&P reports earnings now in the next 3 weeks. And that means they are all in their corporate blackout window, cannot buy back shares. The main event will be November 19th, NVIDIA reports. Stand by, see what happens there. Why does the market continue to go higher? Despite people saying, oh my God, it's going to be a bubble, it's going to crash, it's going to crash. Well, maybe it does, but it ain't happening anytime soon because people are too bearish. Implied volatility, realized volatility table here from the great guys at Hedgeye who do the best macro work out there. If you ask me, look of the passive amount of put buying currently in the S&P, 155% implied volatility premium. That means massive put position. Everyone trying to hedge these all-time highs on a 1-year Z-score. Anything over 2 is extreme, 2.5. Same with the QQQs. To me, that says they can continue to go higher in this backdrop, especially with NVIDIA showing continued strength, higher lows, higher highs, and a bullish trend all-time highs. Looking down here at those mega cap names, all green, all implied premium volatility on those volatility premiums. So that all suggests a bullish backdrop. The market does not want to face the reality that this market continues to go higher and continues to fight the tape. That's the reality. A interesting topic that's been on my mind here the last week is currencies. Currencies, one of my favorite topics, the fiat currency regime, which is a facade, which I keep talking about. Oh my God, now we have the DXY rallying. 99 here on the DXY. What is the DXY? It is a dollar-weighted index that has major weighings through the euro, through the Japanese yen. What did we see here in the last week? Germany really pulling back on a recessionary probability for Europe, the strongest economy, which means the European Central Bank will have to start cutting like all the other central banks, which means weaker euro relative to US dollar from a rate of change terms. They have not been cutting what the US has. Same with Japan. First female prime minister, she comes in and she said, keep the money printer going. We are not going to raise interest rates. We don't want to do that. We're going to keep all this seesaw going. What happens? Japanese yen weakens against the dollar. So why is the DXY rising? Because the euro and the yen continue to weaken relative to the US dollar in this time and space, currently in this moment. All these currencies are weakening at the same time. It's a correlated effort between all the central banks. The Canadian dollar, it's a piece of toilet paper. It holds no gold. It has no backing on the world stage, but it is in this index. So if they get weaker, the US dollar will get stronger relative to each other. So I can see a time lapse here potentially where that Japanese yen goes to 160 in the next 6 to 9 months. It's already went from 100 to 150, lost 50% of its purchasing power for citizens. Same with the euro. The euro could fall back, currently around 116. It got as high as like 118. I can see it going to 108. In that backdrop, it's quite possible then that the US dollar through that DXY index rallies to about 105, 106. But let's look at the real currency, the one that is not manipulated by those baskets of fiats all around the world, which they all work together. Central banks, gold. Gold measuring US dollar, all-time high, 4,000. Speaking truth serum to all the fiat that is failing, down 50%. Fiat is year-to-date against gold. Gold up 50%. If you want to look at through that lens, the GVZ, why is gold considered currency? Well, it can be traded for goods or services pretty much anywhere in the world. Always has been 5,000 years. But its volatility component much more resembles a currency regime than it does a commodity regime. In this like 12 to 20 band over the last 10 years, GVZ, this is the volatility of gold. Gold is the only real asset that has a right tail positively correlation volatility with price appreciation. Its volatility can spike out, as we've seen over the last week here, spiking to 21, and the price can accelerate. In most other beta trades, like the equities, like NVIDIA, like Bitcoin, when volatility spikes, it's actually potentially a left-tail bearish event, but not so much for gold. I see we are on the verge of a potential $500 week in gold. We had a massive run here. I'd like to see consolidation around 4,000. I think if it pulls back at all, those physical buyers that are breaking the paper market are going to push it even higher. Kospi overnight, South Korea, boom, big move up 4.5%. If you're just long the South Korean stock exchange, even this year, you're outperforming the S&P 500, up 40%. Is Scott Bessent and the Treasurer going to buy Korean won next? Did you see yesterday they bought 20 billion of Argentina peso, actual currency. I have no idea what they're cooking up with that scam, but nobody wants Argentinian pesos. And I think it's just a more BS. What do we got? Global debt continues to rise. Thus, fiat debasement is the theme. Just the math. There's not a narrative. $14 trillion increase in Q2. And globally, for the first half of this year, we're up 21 trillion in global debt. Yield curve control globally. We cannot have debt that has high interest servicing costs. The math just does not work. That's what we're seeing through gold. That is the truth serum. We are in a debt-based global economy and needs to continue to be inflated. It can't have disinflation. We just need a slow and steady grind higher than inflation. That's the playbook. Copper looks real strong. Natural gas catching a bid. Silver looking unbelievable. All-time highs, $50 an ounce US. Oil still sucking. Bitcoin looks pretty good here as a pullback. Get long hard assets. Get long anything that's linked to inflation and debasement of fiat. That is the theme. That's what we'll continue to harp on. Boom. I hope you have a great weekend. Give thanks to your family if you're in Canada or anywhere else. See you soon.